Welcome to In Conversation with Trevor, the South African series. We are very passionate about Africans telling their own stories. And this is an opportunity for us as Africans to record our history in the way that we understand it rather than waiting for other people to tell our stories. Thank you for you in the audience, but there's a bigger crowd out there on a number of our online platforms and Gibbs online platforms. So the bigger audience is out there. Again, thank you for being brave enough to come in with your COVID masks, to come in and join us in this conversation. So I've got my friend that I've known for a very long time, Stafford Masie. So by way of introduction, Stafford has been in the ICT industry for more than 25 years. He worked for Telkom, he's worked for Dimension Data and Novell as a software engineer. Stafford was responsible for establishing Google's presence in South Africa in 2006. After leaving Google in 2010, he founded several fintech businesses and several technology startups. He is known for two payment platforms, Payment Pebble and Payment Blade, which has actually been rolled out in Australia and New Zealand, am I right, as we speak in more countries. He's an inventor, a mentor within the early stage technology startups. He lectures at several business schools such as Wits, Gibbs, and Henley. Over the past 6 years, Stafford has focused on Bitcoin blockchain network and all aspects of cryptocurrencies. He serves on a number of boards, including Discovery Bank. So please join me in welcoming Stafford Masie.
Something technologically speaking that has impacted mankind more so than probably anything that we've ever seen before then, right? So I'm talking about late 90s and backwards. So the internet is this thing built on that. So we ran around showing people the browser. We told people, take a look at it. And people were like, nah, it's not going to work, man. You download a video and it takes 3 weeks to download. You connect to the internet and it screams. And then you need like a computer science degree to get the driver to work and the network interface card. And we were like, this is going to change everything. And people were like, no, it's not. And people said it was a fad. People said it's never going to go anywhere. But we knew what was happening. Why? Because as technologists, we saw the amount of humanity cascading into the space. Every kid that was working on computer science in any way, any programmer was working on internet stuff. Everywhere. It was internet stuff. And then in the late 1990s, I lived in the United States and I flew to the MIT campus to go watch a presentation by two gentlemen that were leaders in the free and open source software space. And then when I watched their presentation, I had that same goosebumps moment that I had when I touched the internet for the first time. I saw people speaking about free and open source software. And then I flew back to Novell's campus in Utah and Eric Schmidt was there and everyone, and I said, free and open source software is going to change the world. We need to get in a bandwagon. This company was making billions of dollars on proprietary software built by engineers on certain floors in southern Utah. And I was telling them that kids building things on the outside freely would surpass their business. And they were like, no. Fast forward to today. Every one of your glowing rectangles is running on its kernel a free and open source software set of code. If you've got an iPad, if you've got an Apple Mac, the core technology, if you're running an Android phone, the core, the platform is open source software. The cloud in the world today runs on open source software. So we got the internet that people scoffed at. It became mainstream and it's everywhere. It's a utility. Open source software, people laughed and they scoffed and they said never going to happen. And take a look at it today. It's everywhere. This is what people are doing again with Bitcoin. You're coming into the space in a skeuomorphic way. And just like when we built the car with the engine, we put stirrups on it to drive it the first time, right? Because we came from riding horses and we thought that's the way mobility worked. It took us years to finally invent the steering wheel to understand how to move the car around. And I think this is the same issue that we have with Bitcoin. And the problem that we have right now is it's kind of like the newspaper industry with the internet. I remember going to Mail and Guardian and speaking to you guys about the internet and how big it was going to be. And even then, there were people in the room years ago were like, no. And I was at Google at the time, I think. And Trevor was at Mail and Guardian and was like, no, nah. And I said, this is going to change your business. This is going to change everything. No, sort of, maybe in 10 years' time. And look at what it did. Everyone wants to talk about Bitcoin on the basis of speculation, right? You guys want to talk about it. Okay, should I buy it or should I sell it? Is it going to go up or is it going to go down? See, I don't talk about it that way. I talk about it within the context of understanding Bitcoin, right? And the very few people want to actually understand it. They just want to know, if I put $10 in it, can it go to $100,000? Now, this is exactly where I was in the late 90s, early 2000s in the United States. People just wanted to buy the stock to see the stock go up. So you got to take the time. You got to understand it. And every single one of you in this room and every single one of you watching on the stream right now, this will impact you in the next 24 to 36 months tectonically. It's going to. It's going to touch you more so than the internet touches you. I mean, think about the internet today, right? You have to pay somewhere to go offline, right? You need to pay somewhere to go to a resort to get disconnected. We used to talk about hyperconnectivity being offline, online. Now you're perpetually online, right? This is not going to be different. So world leaders coming out and saying this thing is, Warren Buffett saying it's rat poison. And, people that are heads of World Trade Organizations, World Banks, etc., coming out saying, watch out for this thing. This thing is not real. This thing doesn't have any underlying value. Careful. I don't believe we shall have good money again before we take the thing out of the hands of government. That is, we can't take them violently out of the hands of government. All we can do is by some sly roundabout way introduce something that they can't stop. And that's what Bitcoin is. It's something that has just come and has come and has come because, let's be honest, what the world has done with fiat currencies is not sustainable today. It's not. I mean, the amount of dollars that have been printed in the last, 24 months in the world, the austerity measures, the stimulus that's been embedded, I mean, it's just not sustainable. The economic structures that we have in the world today, particularly look at the inflationary measures, etc., it's not sustainable, right? Fiat currencies are farcical. And the thing that Bitcoin does is it makes more and more of the masses understand the history of money, understand where money comes from, what money is, what's the identity wrapped around money, and I think that's very, very important. So as we move along, more and more people are getting educated about what this is. And I think from a Zimbabwe perspective, you know what happens when you print money and you print money and you keep printing money. And we've seen many examples of that. We've seen Venezuela, we've seen Argentina go through it. We have seen, Cyprus go through it. We saw Iceland go through it. We saw in Ukraine what happened with the war, and what happened to the currency there, the run on the currency. So we see that these things are very, very possible. Then we've got this guy, Milton Friedman. He gave us a fitness function in the early 70s. And he gave us this fitness function pretty much the same time when Nixon took the dollar and ripped it away from the metal, right? He said the dollar is no longer linked to gold. That's it. The dollar is now in this esoterical world of GDP and political stability and rule of law and blah, 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 right? It's a narrative. Fiat currency is just a narrative, right? The US dollar is the global reserve currency, yes. And I think it will continue to be that. But there's something that's now emerging that's independent of any nation state, independent of any particular leader in the world, and it lives independently. And it has the capability to execute autonomously. And that's a very scary thing. So he gave us this fitness function. He said the sole responsibility of an organization is to derive value for its shareholders. That was Milton Friedman. More or less the same time that Nixon did this thing with fiat currency. And what happened was, what we see in 2018, next slide, then it went to 2 trillion. This is mass concentration of capital. People with this amount of nation state capital in their personal individual capacity. This is not sustainable, right? This is when you take things like AI and you blend it with Milton Friedman's fitness function, and then you get mass concentration of wealth, attention. And take a look at this. This slide's very fascinating. You take a look at the net asset, the market cap of the top 5 technology companies, and you combine it, it outstrips every other company on the S&P 500 combined. We've never seen this before in the history of humanity. We've never seen not just capital, the market cap, but if I had to measure this on the basis of attention, right? All of us are in those containers in some way or form, right? From an attention perspective, eyeballs perspective, revenue perspective, just general internet usage perspective. I mean, these are nation states. These are not businesses. These are businesses that control billions and billions of users. And we've seen what they can do in terms of sentiments. You can see what they can do in terms of elections. You can see what they can do in terms of false news and, facts, alternative facts, etc. So it's incredible that we've seen this concentration. And my argument is this is not sustainable either. If you take a look at that, productivity is going through the roof, but wages are stagnating. All right, they're stagnating. So we're seeing businesses doing more with less humanity because they can. And I've come up with a quote there: AI is a superpower and its kryptonite is inequality. And that's the fitness function that drives our economies today. It's leaders that are essentially measured on the basis of deriving value for shareholders, because that's been your sole responsibility since the early 70s. Now you've got these superpowers that enable you to do more with less humanity. Sim, what does he do? He goes and closes all those bank branches. Why? Because he doesn't need bank branches anymore, because he's got all this technology that he's got bots, standard bank bots. He's got all this AI executing around his business, so he doesn't need this infrastructure that has humanity inside of it. Because he's driven by Milton Friedman's fitness function. His sole responsibility is to derive value for his shareholders. But in this new day, what we need is a different narrative. And that narrative should be not to do more with less, but to do more of what was previously unimagined. When we gave Sim Shabalala the ATM, you know what Sim and all his friends did? They didn't lay off all the tellers. They repurposed them. They made them information workers. They gave them a keyboard, a mouse, and they connected them to a big AS400 or a mainframe in the background. They made them information workers. And then suddenly financial services created more work. They created a greater portfolio of services. But what we see happening now is businesses are not doing that. Right? Because businesses now have this mass Milton Friedman fitness function accelerating everything. So it's not sustainable. I'm trying to paint the picture of what's happening in the world today that's not sustainable. 21% of all US dollars were printed in 2020. Let's read that again. 21% of all US dollars in circulation in the world was printed in 2020. That's so far. That slide's a couple of years old. Or 4.5 trillion. When we talk about 4.5 trillion, I don't think we truly conceptualize. I actually have a slide in here. I've hidden the slide because I don't have time. But if I had to say like a billion seconds, a trillion seconds, it's like 32,000 years. We just don't understand. These numbers are big numbers, right? And they're not sustainable. They're absolutely not sustainable, right? So take a look at the inflationary rates. Why? Why do we have these inflationary rates? Why? Because Federal Reserves are just, what are they doing? They're just printing money. Can't just print money. On the back of what? On the basis of what? It's not sustainable. So we're living in a world right now that what happened in Zimbabwe for a period of time is happening on a global scale. It's actually happening. We had mixed this up with lockdowns, mixed this up with everything else that's happened, and you realize that we've now finally pulled one of the cards of this house of cards. The question is, what lays ahead? More austerity measures? What are we going to do? Are we going to increase petrol prices and increase interest rates? What are we going to do? We're going to have uprisings. We're going to have challenges with this. So people are being disillusioned with what's happening around them. Then we got people deplatforming people. And not like some foreign dictatorship like North Korea. This happened in Canada a few months ago. Justin Trudeau, when the chocolate crisis, the chocolate protest happened, he deplatformed people. He instituted an emergency act, and it gave him the power to deplatform. And you know what they did? They used AI to take a look at the footage of all the protesters, grab their faces, and they deplatformed those people. So they went to the banks and told them, kill their bank accounts. They went to the crypto exchanges and tried to do the same. And I love what one of the crypto exchange guys said to Justin today. He said, it's like asking Louis Vuitton to run around to all the ladies that bought the bags and say, where's, like, give me your wallets or take their wallets back. You can't do that because you didn't understand crypto. You didn't understand what crypto did. But these are big shocks. I'm just trying to show you the shocks that happened. There's two. The greatest chief marketing officers for Bitcoin in the world today is Justin Trudeau and Vladimir Putin. Those are the two chief marketing officers of Bitcoin today. Then you take a look at what they're doing to Putin. Now, I'm not for Putin, for Ukraine. I don't have a dog in the fight, right? I have an opinion, but I'm not going to share it here. But the point is, we have countries getting together and deplatforming another country. Literally taking their big banks and deplatforming, taking a look at some of the individuals in the country and deplatforming them. That is scary power. That's not the power that governments should have. That's not the power that's in the interest of the citizenry or the civilians in the long run. We've seen this in Ukraine, and then we see this with traditional banks. I mean, Sim's been caught out a couple of times also, Standard Bank. Right? Banks are not these places where good things happen only. where everything is safe. We all know this, especially when you're from Zimbabwe, right? You know that that's not the case because. But the point is, it's not about Zim, it's about the banking infrastructure. It's about the fiat currencies. It's about the underpinnings of it and questioning those underpinnings. Look at Credit Suisse. I mean, in the global bank, look at what's happening inside of Credit Suisse. It's a corrupt institution because it is run by human beings. And yes, the branding on it and what they're supposed to be, blah, 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 blah. But at the end of the day, politicians and these folks that control the money get together and strange things happen. So let's talk about what happened just generally speaking, from a technological basis. Now, that's what's happening in the world, right? So if you were to ask me what's happening with technology and why is technology leaning into the space called cryptocurrency, this is it. 3 things happened in 2007 that dictated the technological things that we saw more than a decade after that. So from 2007 up to 2020, 3 things happened. So I just put this up there because just look at this. In 2007, November, that was the cover of Forbes magazine. All right, Nokia, 1 billion customers. Can anyone catch the cell phone king? Apparently, yes. It's like Apple, right? Who's going to catch Apple? Like, how could you possibly? Who could catch Google? But here's the thing. In 2007, the first thing happened. Someone got up on stage and showed us a technological thing that changed us completely, right? And that was the iPhone. The iPhone was an incredible thing because it gave us the Willy Wonka wand, the magic. It gave us the superpower. It's not cloud in the sky, it's cloud in your hand. The glowing rectangle in your hand is an extraordinarily powerful device. It's extraordinarily powerful, right? There's more activity happening on the edges of the internet than inside the internet. There's more content generated on the internet from us versus institutional content created. You guys are constantly selfieing and, you're telling people where you are, how you feel. It's the last thing that you feel before you close your eyes at night. It's the first thing you reach out for when you wake up in the morning, right? It's because of that device. He gave us a device that allowed people to build applications and services on top of. And it was an ecosystem. That was a major technological shift in the world because it wasn't just a mobile phone with a bunch of services on it. It was an ecosystem of mobile applications on top of a device delivered. And it's changed everything. Facebook lives on the basis of that. Google, where it is today, is on the basis of that. Social media, etc. It's all on the basis of what Steve Jobs did in 2007. Let's all agree that was the major technological shift. Then, from a human perspective, this happened. We had more millennials in the workplace than any other generation in 2007. They finally took over. So we had this big technological change, and then we had this generational shift in the professional workplace in 2007. Millennials represented the majority of the workforce. And then the third thing happened. And the third thing is more humans lived in cities for the first time ever than outside of cities. Urbanization. So we had more people living inside of cities than outside of cities. If you combine the technological shift with this generational shift, with this urbanization, these were the 3 currents that pretty much dictated what everything would look like up until 2020. Then something big happened in 2020 and 2021. And let's take a look at those. The first one. Okay, now look at this slide. What I've done is I've correlated what happened in 2007 with what's happened in 2020 and 2021. We've seen 3 major things happen again. On the top is the iPhone that was given to us, right? Correlate that. Let's be honest, in the last 24 months, Bitcoin and cryptocurrencies has finally gone mainstream. It's finally gone mainstream, literally in the last 2 years. Why? Because everyone was home, everyone was connected, and everyone was getting broadband, and Sim Shabalala and all the guys at Standard Bank invested huge infrastructural budgets, etc., to enable their staff to work from home. They gave them big broadband connections, they gave them the necessary equipment, and they didn't just connect securely into Standard Bank's mainframe, they also connected onto the internet, and they put in their credit cards into websites for the first time to get their groceries. And that's that second one underneath that. Then they discovered Bitcoin too, but hyper-digitization. We saw the millennials in the workplace. In 2020, 2021, we saw a generational collapse in terms of digitization. We saw every generation hyper-digitized. Let me give you a study. In Europe, the top 4 economies in 2020 and 2021 during lockdowns, this was an Okta study. In the top 4 economies, 55% of the people that went to go work from home had never worked from home ever before. And those are the top 4 economies. We're talking about Germany, Spain, etc. Those folks, 55% had to put infrastructure in place, and that infrastructure investment is significant, right? So generational collapse. And then the third thing at the bottom there is from urbanization, we spread out and we went to go work from home. And the infrastructures that enterprises put in place to enable that. The fact that that happened has changed everything around hiring, organizational structures, hybrid working, etc. Those are the three massive shifts. I want to focus on the middle one. This generation, yes, I put an old guy there, but what we saw was the entrance of Gen Z. Gen Z is a generation of human beings that, first of all, if you take a look at every leader in the crypto space today, the guy that, the Do Kwon, the guy that did this Luna Terra exchange cryptocurrency stablecoin thing, right? Look at his age. I think he's 23, 24. Keep looking. The guys that are building NFTs, the big people doing the big things in this space is this generation. Okay, if you take a look at Gen Z is the most disenfranchised group of people that we've ever seen. Think about it for a second. Their privacy has completely been violated. Completely. They have no privacy. Their birth was captured in a social media container. Every trip that they've ever gone on, every birthday party, every little thing that they did that was funny, not funny, their graduation, their entire lives lives in a social media container. And because of the EULA, the end user license agreement, they got no rights over their entire life. If they look over their shoulder of their lives, they have given up. Their parents have given up their lives to Facebook, Instagram, keep going. So it's from a privacy perspective, we've never seen such a high violation of privacy of an individual human being in the history of humanity. So first, privacy. Second thing is, this is the generation that watched what their parents went through in the 2008 financial crisis. They still remember it very clearly. They don't believe in banks. They think banks suck, cannot be trusted, and they watch the headlines 2008, 2009, and most of them are still watching their parents deal with the fallout of the 2008 financial crisis. I have a 21-year-old and I have an 18-year-old. They have no interest in a bank. Why? What's a bank going to do for me? In fact, Dad, I remember when the banks were falling over, will my money still be safe in that? How do you know? You can't answer those questions as a parent today legitimately, confidently. Right? You can't. Because of what's happening in the world today, the slides that I just showed you before. The world's upside down. Stimulus, inflation rates, lockdowns leading to logistical reboots in the world. So it's never been more unsafe to put your money in a bank than it's ever been before, if you consider all the terrestrial factors. Then you take a look at Gen Z, right? Privacy. Second thing is 2008 financial crisis. They do not trust banks. Third thing is, these are the folks that, they grew up with the technology that you see in their hands, and they don't have any value in the physical. They don't, like when I grew up, my first music was an LP. And there was like an LP rack in a house, and then there was, cassettes and CDs, and they want music that dematerialized. Everything for them that has value is dematerialized. They don't want a car, they want transportation via an Uber app. It's a dematerialized access to transportation. They don't want music in a physical form, whatever. They want Spotify or some stream service. They don't want movies on a VHS cassette deck or anything. They want Netflix. For them, the world has been dematerialized. They don't care. They're having their Woodstock moment. Bitcoin and cryptocurrencies is the digital Woodstock of Generation Z. What we saw in the 60s was a rebellion against war. It was sexual liberation. It was anti-politics. It was all of that because of the Vietnam War and everything that it was doing. Today, this generation is doing it silently, digitally. They don't care to have a Nike sneaker in the physical. They feel a Nike sneaker in the metaverse has utility. They can do things with it. It becomes an asset class that they can lend and borrow against. They don't see the world like you and I do. And this is the generation pushing it forward. So the cascading of humanity into the Bitcoin cryptocurrency world is this generation. Because simply this generation doesn't like what we've done. They look around, they look at the Ukraine crisis. They hear about a nuclear bomb's going to drop. They look at climate change and they see what we're doing to the planet. Everything around them in the physical world doesn't have longevity to it. So what they're doing is they're turning all their attention, all their latent human capital, and they're building a virtual world with virtual currencies, independent of governments, independent of institutions, and Bitcoin's timing couldn't have been better for this generation. And that's what I'm trying to articulate, is The currency around Bitcoin is the humanity around it. That's what gives it its momentum today. Yes, the technology may be awkward and it doesn't really work. When you get a crypto wallet, it's like really complicated. When you send Bitcoin, it's like, what? Doesn't matter. The shift has happened, and it's going to get easier and easier and easier. I'll say this, in the next 36 months, every single person in this room, if you don't own Bitcoin, you will have transacted across the Bitcoin network in some way or form. Every single person in this room.
Can you repeat that?
Every single person in this room in the next 36 months will engage with cryptocurrencies in some way or form. All the way from you will own it as an asset class, you will use it as a medium of exchange, or you will interface with it from a security perspective, or you will authenticate into it. Example, non-fungible tokens. The beauty of non-fungible tokens is that it is a very beautiful authentication layer building up. Imagine an electronic patient health record not being electronic, but being an NFT. That kind of changes the game quite substantially from a healthcare perspective, and what you could potentially do with that data set. And the power of Bitcoin that's giving these people is the fact that Bitcoin has no one that can switch it off. Let's talk about what is Bitcoin, and I'll give it up to Trevor to then jolt me on it, right? So first of all, what is it? And I am not. So I want to confess, I'm a Bitcoin maximalist. So every other like altcoin out there, I don't buy into it. I like it because I went to the internet when GeoCities happened. I don't know if you saw the internet in the middle 90s. There was this thing called GeoCities where people could go online and create websites. And it was like crap. It was like stupid. And people went there and they created, and every time you went to their website, you'd see a little guy digging, that animated guy digging. Or you'd see a little like red, yellow and black thing on the internet. I mean, some of you are too young to remember this, but the internet was this place that was just messy. And that's okay. That's what cryptocurrencies are for me. All these altcoins, they're messy. They fall over, they break. We say, well, wait a minute, we need regulation. And it doesn't matter. It's innovation happening. And even if it's mediocre, it's happening en masse, and you should not underestimate it, ever. Don't underestimate this. So what is Bitcoin? So first of all, Bitcoin is 12 to 13 years old. Satoshi Nakamoto came along, wrote a white paper, issued out the network, wrote the code in 2009. There was a little bit of a bug fix that happened post then. And the code's never changed since then. If you create a Bitcoin node today, you download the 2009 code and you can plug it into the network. It does a little bit of a bug fix, it's a small bug fix, and then it connects and boom, it's done, it's in. The code's never going to change. Never. Okay? It is, the beauty of it is its simplicity. It's incredible. It's the ability for me to send you value with no intermediary, more securely, where neither of us can hack it. Bitcoin's never been hacked. In its 12, 13 years, it's never been hacked. And it's $1 trillion asset now. So surely someone would want to hack it. No one's been able to get into it. It's never been hacked. Exchanges get hacked around it, but they're not on the core network. So first of all, it's a distributed ledger mined by miners interfacing with nodes on the network. It's completely distributed. And that's its number one attribute. Yes, you can try as a bank, which Simoni's team, I've keynoted inside of Sim Shabalala's Standard Bank business. And I think that was the last time they had me, because they were doing some blockchain project. And I was like, what are you doing? Leave blockchain alone. In fact, the way Bitcoin works, if you try to use it for anything else, it's actually really bad technology, right? A distributed ledger that keeps, like a database that keeps appending the entire records every time something happens is like inefficient and stupid. Just get like a database with web services and an set of APIs and do it better. But no, banks like, we're going to do blockchain. And then they run from the blockchain. They don't understand the very first thing is the fact that decentralization means nobody can switch it off. Bitcoin doesn't have an owner. The founder, I believe, has died. I don't think he's around anymore. Something has happened to him. He's either incapacitated, he, she, them, incapacitated, they've gone away. But they gave us this gift. They issued themselves, I think it was like 80 Bitcoins, and those Bitcoins have been stagnant. And even if Satoshi Nakamoto woke up tomorrow and tried to do something with Bitcoin, he couldn't do anything because he's only got 80 Bitcoins. That's it. And we know that. And after that, it's now proliferated. You cannot switch Bitcoin off. China tried. China made mining illegal in China. And what happened with the hash rate? It moved from China to the United States. You can't switch Bitcoin off. It's impossible. No nation state can. No group of companies can. Putin can't. The United Nations can't. The G7, the G8, the G20 can't. No one can switch Bitcoin off. It's autonomous. It lives by itself. It's a digital property with store value and medium of exchange attributes. It can do both. It is like, for me, Bitcoin is like digital gold. If you want to put your money into something that's going to be around 100, 200 years from now, it's Bitcoin. There's two things, gold and Bitcoin. I argue gold, when something happens like what happens when Putin comes around and takes you over, and you're a Ukrainian civilian, what do? You take all your gold bars and then you try and get out of you can't, right? People were escaping Ukraine with USB sticks. What was on those USB sticks? Bitcoin. They were leaving with their entire wealth on a stick, and some of them could remember their keys in their heads. People were leaving with their wealth in their heads. That's powerful. Supply leaks, so the leak is like gold production is 1.5%. Bitcoins that are issued on a daily basis, right? In terms of the algorithm and how it spawns, it's got a limited supply of 21. It's 1.8%. It's the hardest money ever invented. There is no form of money that's ever been invented harder than Bitcoin in the history of humanity. Never. We've never seen money harder. It's got a fixed supply, we know. Gold supply, we don't know, right? We just know it's really hard to get gold. And it's been very hard for as long as we've tried to get it. But the gold has a narrative. Bitcoin has math. It's very different. This is math. It's permissionless. It's immutable. It's available to everyone. No matter where you are, from Zimbabwe through to New York, it's available to you. It holds its value across time like gold. It does hold its value. Now you may scoff at it. If you bought Bitcoin 2 years ago and you compare it with gold, you're up about 360, 370%. If you bought it when the inception, you're up about 475,000%. So if you look at Bitcoin daily, weekly, annually, you're going to miss it. If you take your purview slightly out and you look at it, and you'll see it outperforms every single asset class in the world since it was born. Nothing has matched Bitcoin, ever. Okay, so it's truly decentralized, fixed code, L3, 65% of Bitcoin has not moved in the last 2 years. How interesting is that? 65% of Bitcoin owned in the world has not moved. So people are putting their money there and they're not leaving. They're not utilizing it. Retail investors own more now than whales. So we own more Bitcoin now than the big institutions or the big whales, which are the people that actually own tons of it. This is how Bitcoin, so people say, like, when will Bitcoin hit 21 million? Like, how long? Based upon its halving and the way the algorithm works, in 2140, it will hit 21 million Bitcoins issued. So hopefully some of us may be around, not be around. I don't know if, not even your kids will be around then, right? So the 21 million is fixed, and the way it works, that's how the algorithm works. So gold's weaknesses. It's not easily divisible. It's not portable. It's not digital. Final settlement is slow and expensive. These are companies that own Bitcoin, that have put billions of dollars into Bitcoin. MicroStrategy, look at that. They own that amount of Bitcoin. Tesla, Galaxy, Voyager, Square. Most businesses now in the world are seriously considering taking capital off their balance sheet and putting it inside of Bitcoin. Why? At least 1 to 2%. Why? Do you really want your money in bonds? Do you really want your money in other asset classes today, considering what's happening in the world? I don't. Right? You don't know whether, even your house, you don't know whether your house is going to be worth that in 10 years' time. With a mathematical limited supply, you know where that goes. These are the businesses. Just take a look at that. Value today, 5 billion, 1 billion. These are big numbers. Companies taking money off their balance sheets and investing it into Bitcoin. List Bitcoin versus gold over the last 12 and a half years. Take a look at that. If you had bought Bitcoin then, take a look at gold. So in terms of the performance head-to-head, it outstrips gold on every measure. Take a look at that, 437%. Next one. These are the books. Please take a picture of these. These are the books that you need to read if you want to start down the rabbit hole. To understand Bitcoin is not to go and buy it, is to read these 4 books. Bitcoin Standard first, the Fiat Standard second, the Sovereign Individual third, and then the Changing World Order by Ray Dalio. I just finished Ray Dalio's book just the other day. Wow. This will give you an understanding and contextualizes Bitcoin for you. All right. So take a look at it. It's saving lives right now. Take a look at what happened in Ukraine when there was a run on the banks. The central bank in Ukraine, what did they do? They stopped people. People went to the exchanges. They bought Bitcoin and they escaped with USB sticks and writing down their keys on paper. They were raising capital, utilizing Bitcoin and cryptocurrencies. There's big institutions getting into this. JP Morgan, Barclays, Goldman Sachs. They now have trading desks. and they're moving a lot of capital into the system. The flight with capital into Bitcoin is extraordinary at the moment. And notice, none of those businesses that I listed there have put any of their money into any other cryptocurrency. MicroStrategy didn't go off and buy Cardano's coin or Luna or one of these other ones. They're all buying Bitcoin because Bitcoin is the only one that's not a security. Bitcoin is digital property. To understand it, you need to understand it's digital property. CGT, capital gains tax, is how it's being regulated in the formal world. And I'm talking about like the United States and Europe. They consider Bitcoin as capital gains tax from a regulatory perspective. It's a digital property. Why is it not a security? Because there's no board, there's no owner, there's no supply chain, there's no inventor, there's no cohort, there's nothing. Bitcoin lives by itself. It's an independent asset and it doesn't have anything. Just take a look at that. Someone, just the other day, on May the 14th, someone transferred $350 million, and the fee for transferring $350 million in Bitcoin was 94 US cents. It moves fast, money fast. Its velocity outstrips any fiat currency. Any fiat currency. There's Central African Republic and El Salvador, the two countries that now have it as legal tender, where as a merchant you are mandated to accept Bitcoin. At starting, now you may laugh at those two countries and you go, oh. I just want to show you the GDP numbers grew in El Salvador. Go, next slide. The GDP numbers grew in 2021. They've been on Bitcoin now for about a year and a half, 2 years. People went like the World Bank, IMF said, are you nuts? It's going to kill your country. They got off the dollar reserve and take a look at their growth. Okay, 44 countries, 44 central banks went to go visit them to see what that was all about. This happened May the 16th. Now, the Central African Republic, we look at them and we laugh, right? Look at the leader of the Central African Republic. Who is he? He's got a double doctorate in mathematics. Good to listen to what he's saying about Bitcoin. He's not just trying to be some African dictator doing something stupid. Careful, right? We always think that. But no, not this time. This guy knows what he's talking about. He's got a mathematical background. He understands Bitcoin. He understands what it is. He's done the homework because when he speaks, it's clear he understands it. Now, what will he do with it? And will it play out? Well, let's take a look at it. But the point is, here's a leader that has the background and the competency. Think about it this way. I could pay Trevor, sitting in Zim in Harare, through my wallet, over the Bitcoin network, and it will pay him out in US dollars in his wallet instantaneously, where he is.
Please do.
But the point that I'm trying to make here is that the stuff's real. The stuff's not coming. It's what's that? It's just the future's already here, just unevenly distributed.